to the ETF Inspector. It's Sunday, June 1st, and this is the video for the week look ahead as well as distribution guesstimate for YieldMax funds, the 7 listed in the title of the video that I cover. But as far as Group D is concerned, there are a handful more, right? AIYY, AMZY, we cover that one. APLY, we cover that one. DISO, MSTY, Misty, that's one of the more famous ones we don't cover though. SMCY, WNTR, XYZY, and YQQQ. So we cover about 7 of the YieldMax covered called ETFs, and I've got AMZY and APLY highlighted here today so we can look at their past distributions to compare them to our estimate for that. But we'll get into the week look ahead, and then as we go, if the fund is in Group D, then we'll also talk about our payment guesstimate. So we'll start off in alphabetical order with AMDY, covering advanced micro devices. This is their individual income strategy fund for this. So the fund actually just paid last week, so there's 24 days till their next declaration. Their synthetic position is out till July 18th for $110. AMD is at $110, so it's worth a little bit of money, $1.7 million. They have 12,535 synthetic contracts. Most of the money, as usual, is in treasuries, and this is all updated after all the trades went through on Friday, and then holdings came out on Saturday. So this is where everything is looking at for the week ahead. They currently have calls sold at 114 and 116, not quite evenly split, 55, almost 5,600 contracts and a little over 6,900 contracts at 114 and 116. Like we said, price is at 110 right now, so they are 2.9 and 4.7% out of the money. We don't worry too much about these other ones. These are the other side of the call spread. This just protects them in the event the AMD would go beyond 120 or 122. That would be the cutoff for us losing money on having to pay back to buy to close, right? So it caps at a $6 loss on each one per share with 100 shares per contract. All right, AMDY is a $138 million fund. On Friday, there were 125,000 shares added to bring outstanding shares just over 19 million. The NAV at 727. So if you bought at the end of the day on Friday at 722, you got a little bit of a discount buying it for less than what it's worth. So we should expect this to move upward a little in the opening tomorrow, just because the last trade price was below the NAV. So why would anybody sell it for less than what it's worth? All right, I keep this. I don't know if I'm going to talk about it every time, but cost to close out the spreads currently at $922,000. But in general, they're going to look to let these ride all week and close them and roll them on Friday and make a profit. Next up is AMZY, covering Amazon. They declare in 3 days this Wednesday. Last distribution was nice, 79 cents. If you take a look at over here in my guesstimate column, I don't think it's going to be as nice. For starters, the 30-day IV dropped pretty drastically. So it's down to, I guess I shouldn't say drastically, but it dropped to 29%. So when they generally try to pay out their percentage based on the IV, so if we took that 29% and multiplied it by the closing price on Friday, because that's the numbers they use to make their decision, even though they don't announce till Wednesday. We heard in an interview that they start all their math before that, and they already have to file what their distribution is going to be by Monday. So we multiply those two together, that comes out to a 35.63 cent distribution. So I didn't start covering this until more recently. So I don't have the full 4 weeks worth of data to say, well, they made plenty more than that. What I do have is a pretty rough day back on the 12th of an $8 million loss, and then the rest of the time they didn't make anywhere near enough to make back up for that to be in the green. But there were weeks prior to this that I don't have their trades. Going forward, I'll be, able to catch all their trades starting this coming Monday, go towards the next cycle. So I went ahead and also looked. So IV alone comes out to 35. If we take a look at their previous distributions, 40, 36. So 35 would end up being their lowest ever. And I say ever, it only goes back to 2023. But so I don't think, it's possible, but I don't think they're going to pay out their worst one yet. So I think they'll add a little to it. I don't think we're getting over 40 cents unless, like I said, unless they made a killing on the weeks that I don't have. So if you check out Retire on Dividends, he makes estimate videos even on the funds that he doesn't cover on a daily basis. So he might have, he's going to have more information, so he might have a better guesstimate on this. But I'm thinking we're getting between 35 and 40 cents. And I am in this fund. I have AMZY. It's a $264 million fund with 16,550,000 shares. Their synthetic is beautiful. 185 is the strike price with a 205 current price, so that's worth over 26 million, but that won't be going towards this one because it doesn't expire till July. So they will close that out maybe late June, maybe early July, and then there'll be nice money made there. For this week, expiring Friday, they have calls sold at 207.50 and 210. Pretty much all of them at 207.50. 100 here is going to be pretty insignificant, but so they're only 1.2 and 2.4% out of the money. So we need Amazon to trade below 207.50 this week to make the maximum profit on AMZY. Next is APLY, also Group D. Apple closed at $200.85. APLY declares this Wednesday. Their most recent distribution was 65 cents. But again, their 30-day IV of Apple has gone down, and so has the stock price. So multiplying 29.9% by the closing price on Friday of $13.01, we get a 29.92 cent distribution based on IV. When we look at their trades, again, I don't have the full month. Probably breaks out around even, not much more, but again, I don't have all the information, so can't make a wonderful guess there. Going forward, I will be able to. Let's take a look at APLY's recent distributions. So we literally just got 30 the time before, so 29.9 is not that far off. I think that's what I said, right? Yeah, 29.9. So, I don't think they're going to help that one out too much, seeing as how they've just recently paid very similar to that, 30, 34, 36. So just because the last one was real nice, but 28, right? So we've had the less than that. So unless there's major wins before I started covering them, I think we're going to get around 29, 30 cents. So the fund's worth $125 million. There's 9.6 million outstanding shares. Synthetic is currently in the negative. It would cost $5 million to close it out. It's out till June 20th, so it will end up getting closed in this coming cycle and move to a farther out position. Everything for Apple, though, is on one call strike price, 202.50, and that is 0.82% out of the money. So they need Apple to stay flat all week, because it's at 285 cents and we got to keep it under 202.50. So it's going to be a stressful week for the fund managers there. All right, those are the only ones that we cover in Group D. So we'll move a little quicker now. FBY covering Meta. Meta closed at 647.49. FBY is at 1594. It's a $161 million fund. There were 75,000 shares added on Friday, bringing it up to 10,125,000. The NAV and the closing price are within a penny. July 18th, 660 is the synthetic position or combo. That's currently in the negative. It will cost $2.3 million to close it out, but we've got lots of time for Meta to go up above 660 between now and then. They've got 3 different calls sold: 652.50, 655, and 657.50. Those are 0.7, 1, and 1.5% out of the money. About 50-50 on the first 2, and then another 1,200 contracts on the last one. So again, we're going to want Meta to trade below 652.50 this week. So there's $5 of room for it, but as you can see, that's less than 1%. All right, GOOY covering Alphabet's Google. I forgot to tell you. So they declare again in 17 days, so it'll be a couple weeks. Google closed at 171.74 and GOOY at 12.33. It's a $118 million fund. There's 9.5 million outstanding shares. NAV and the closing price are very similar. Synthetic's doing well. It's worth $8.5 million if they closed it out now, but it's good till July 18th. And it's at 160 with a current stock price at 171. 10 days, so they're not this coming Wednesday, but the one after that will be declaration day for them. They've got 2 call strike prices, 2,200-ish contracts at 172.50. They're 0.4% out of the money. And then 4,600 contracts at 175. They are 1.9% out of the money. So they play these funds, have their options on these a whole lot closer than what we're used to seeing if you watch my ULTI and LFGY videos. But these are obviously much lower volatility on the underlyings than what they play on the other. Okay, MSFO also just paid last week. So they're Group C, 24 days till the next declaration. Microsoft closed at $460.36. MSFO closed at $17.22, 2 cents below the NAV. It's a $117 million fund with 6.8 million outstanding shares. Their synthetics doing well, worth almost $7 million. That's a 435 strike for July 18th. So it's already $25 in the money on the good side of it. They've got 2 call strikes, again, playing it real tight, 1% and 1.5% out of the money, 465 and 467.50. So another one, we want Microsoft to trade below 465 this week. And finally, NFLY covering Netflix, also Group C. They also paid last week. I own them as well. So I own NFLY, APLY, and AMZY out of these. And I own ULTI, all those in my trading account. I own LFGY in my 401k, so I don't really include that because that money's got a long time before I get to see it. But all right, Netflix closed at $1,207.23. NFLY at $18.26. Small discount off of the NAV. It's a $153 million fund with 8.3 million outstanding shares. The synthetic's doing well, worth $9.5 million right now. It's a July 18th, 11:40. And they've got 3 different call strike prices: $1,217.50, $1,220, $1,222.50. 756 contracts on the first, 100 on the second, and 419 on the third. Again, those are 0.8, 1, and 1.2. I'm not sure if we even had a single one that was 2% out of the money. So they play these all real close. All right, so now that's your week look ahead. We talked about a couple of distribution guesstimates. Obviously, I'll be able to do a lot better as the time goes by, and I've got all 4 weeks worth of data collected to be able to crunch numbers and give better guesses. So for the better guesses right now, go check out Retire on Dividends. I'm actually at the soccer fields right now, sitting in the van making this video in between games where my daughter made it to the championship. We're at a tournament. So I just wanted to sneak this in while sitting around. Any of you sports families know, sitting between games, got to kill some time. So give you the dad joke of the day. I got to come up with it off the top of my head because I don't have my calendar with me. But before I do, just thank you. Thanks for watching. Thanks for all the encouragement. I appreciate it. If you haven't already, please subscribe, like, and do all the good stuff. So this is one of my more favorite dad jokes. Why do divers fall backwards into the water off the boat? Because if they fell forward, they'd still be in the boat. I don't know why I think that's so funny. But all right. I hope everybody has a nice rest of your weekend, and we have a great trading week coming up. Good luck, and I'll see you in the next video.